move, which again is a shot in the arm for banks because it's a big relief coming in from the Reserve Bank of India. Now, yesterday, the RBI clarified that the liquidity coverage ratio norms, the final norms that are coming in, will be a little more flexible, less onerous than the draft that was proposed a couple of months back. To talk about this, we have Harsh Dugar, Executive Director at Federal Bank, joining in. Mr. Dugar, thank you very much for taking this quick call. So the RBI itself outlined that once these guidelines are implemented, from the 1st of April 26, the impact, I think, is going to be 6 percentage points in terms of overall LCR. But you tell us the fact that, now these norms, this runoff rate, as it's called, it's not as high for wholesale deposits. Even for the internet and mobile banking, it's not 5% as was proposed, it's 2.5%. So how does this impact your operations and liquidity?
See, I'll comment on the banking sector as a whole. As has been mentioned, there has been obviously a couple of things. Earlier, it was anticipated that the higher runoff rate would be at 5 percentage points for the IMD segment, which has now been done at 2.5%. The biggest benefit which is coming in is a substantial reduction in the runoff rate for non-financial operational deposits. That being brought down from 100% to 40% is going to provide significant liquidity and reduction in the requirements, because as was mentioned by RBI in this thing, that it will actually increase the LCR from the present from 100 to 106%, which was earlier anticipated to go down to 90% as per the draft guidelines. So that's something which is going to be a fillip, and that will obviously provide significant liquidity, about 2.5 to 3 lakh crores is what we were anticipating, which will aid the credit growth as well. So it's a big plus for the segment as a whole, and it is becoming effective from 1st of April 2026. So that's something which I think banks can, in general, look forward to: a higher liquidity to manage growth and support credit growth.
Okay. Harsh, hi. So have you done any analysis for Federal Bank? And first, if you could also tell us, what is your share of wholesale deposits? What's your current LCR? And now with these relaxed norms, what would be the incremental liquidity which is now available for you, perhaps to lend?
So we are in a silent period, and I would like to avoid any questions which is pertaining to the bank in particular. To the segment and about the guidelines we can comment on. So I would request you on that part.
Okay, so this 6% increased liquidity now, which is available to the system as a whole, what would be the incremental lending that will happen on account of that?
Yeah, so if you look at it, the credit growth is expected to be supported to the extent of about 1.5 percentage points, which is significant, because considering that we were talking about earlier liquidity in terms of an issue for deposit growth. So this will indirectly help in terms of supporting credit growth. So broadly, the 6 percentage points savings in the LCR, which RBI commented on for the system as a whole, will result in some liquidity being released to the extent of about 2.5 to 3 lakh crores, which in turn will aid credit growth by about 1.5%. So that's for the system as a whole.
So 1 to 1.5% boost to credit growth system-wide, you'd say, yes, from next year, right? Which is when these norms come into effect, from 1st April 26.
Absolutely, from April 26.
Okay. I mean, 1.5% additional credit growth. I think the market will like that. Mr. Dugar, just before we let you go for this year, because we're going through bank earnings, and I mean, the big chatter on the street is everything else is fine. When will growth pick up for banks? So just the broad thoughts very quickly on this.
So yeah, there's been a little bit of a muted growth in terms of it, but we are anticipating that will come back. There are obviously uncertainties because on account of the tariff wars which is going on, the uncertainties on account of that has definitely muted if you look at the wholesale the credit growth outlook. But if you look at it on the retail side, people do see that this growth may come back during the course of the year, whether it's microfinance, and yet people are talking about it bottoming out in Q1 and Q2. So you'll see this coming in. Unsecured loan growth, which was muted last year, may also revive. So overall, yes, we are still guiding for 11 to 13% for the system level is what we are looking at, the system as a whole.
11 to 13% system-wide growth this year. All right, Mr. Dugar, that's helpful context. Thank you very much for that perspective. Good talking to you. And of course, we'll discuss the bank-specific questions once the results are out. That's Federal Bank on the latest moves on LCR from the Reserve Bank of India. That's banking. Gurmeet,